It's tax time! What, you're not excited? You know, sometimes we make almost as much money saving in taxes as we do actual income.
This is true. Hey guys, my name's Arianne and this is my better half, Chris. We created this channel so good people like you can have financial freedom with passive income. So in today's video, Chris is gonna tell us all about how we manage our taxes. You remember when we had that video about how to invest with your spouse and how to work with your spouse? We talked about one of the things you need to do is to divide and conquer, so you're not doing things twice. So we actually learned that the hard way. In the beginning, we just did everything twice, right? Some of our strengths are actually very similar. We're both reasonably detail oriented. So at one point we would like analyze the deals twice, but then later we realized that we have to divide and conquer, and that's better for both of our sanities, and it's actually much more efficient and effective. So this is one of the things we divided and conquered. I almost know nothing about the details of our taxes. I mean, I know big picture, what's happening.
If I do that, I am not a CPA. We coordinate with the professionals in order to do this, so that's where we're actually going to start today. So there's actually two different types of tax professionals, and both of them are absolutely critical, and both of them can save you literally a fortune in taxes. By definition, saving money in taxes is actually extra income you can spend, which accelerates your growth. So it's actually really important for financial freedom to manage both your taxes, your tax savings, and the extra passive income you're generating. It's like working on the problem from two sides at the same time. So the big picture are there are two major types of tax professionals. There are some that focus on tax prep, the preparation of taxes, and some that focus on tax strategy. Some firms will have people who specialize in both within one larger firm, but we typically find that your CPAs focus on one or the other because the tax code is absolutely enormous and nobody can deal with it. It's huge. Paying for a specialist here actually pays in spades. We're going to start with tax prep. These CPAs focus on what has happened. They can't really change anything that has happened. These are the facts, and based on these things that happened, these are all the deductions you qualify for. These are all the places where you can expense things and where you can capitalize things and where you can amortize things and all these weird jargon terms that basically means this is the least amount you owe based on what happened. Big picture here is you don't want to pay more than you owe. You want to pay exactly what you owe, not a dime more, not a dime less. So these guys have actually saved us a ton in taxes because they caught extra deductions that we were eligible for that we missed, because we weren't specialized in that area. This happened both in our active companies, so our flipping and wholesaling companies or our coaching companies or any of these other companies that we run actively, and these also happen on our passive companies where we have other investors or us in buying large apartment buildings, syndications, all of these other types of entities. And we actually have different professionals who deal with each of those niches specifically because, again, the tax code is enormous and there's no way one guy knows all of it.
Yeah, I think fun fact, earlier today there was actually a $100,000 deduction that one of our tax professionals found for one of our partners. Funny enough, not even us, but hey, our partner's pretty happy about that.
Yeah, and this happens all the time. Mistakes are made and it's important to review those documents, but in the end, the specialist there is going to find you all of the deductions that you can qualify for and literally save you a fortune.
And we actually use multiple tax preparers and multiple tax strategists. Like I said, one of our tax strategists and preparers found that. And it's because we just have so many businesses and so many properties that it's not like we only work with one person. We have multiple people for all of those things.
Yeah, and different industries, right? Again, it pays to pay a specialist because they know the tax code around what you do. Now, this is the past, right? This is everything that has happened. You can't change it. This is what happened, right? So there's only so much you can do on the tax prep side. All they can do is reduce your taxes down to the minimum that you owe. This is exactly how much you owe, and you don't overpay, right? On the other side, we have the tax strategy, right? These are sometimes they're attorneys, so they're tax attorneys and tax prep. Sometimes they have tax prep in their firm too, but they focus on, okay, last year sucked. That hurt really bad. How do we make next year hurt less? How do we owe less taxes? How do we qualify for more deductions, more whatever, to make next year's tax burden less? The critical thing when dealing with a tax strategist is to be absolutely honest, absolutely clear. This is what I believe will happen over the next few years. They'll do a pro forma where they look at, based on the amount of money you expect to make in these different types of income over the next 5 years, if you do X, Y, and Z, you will owe less in taxes than what you were currently doing. right? They'll save you future taxes by helping you adjust how you run your business. The critical thing here, which I mentioned before, is garbage in, garbage out. If you give them bad data, they will prescribe bad advice. Nothing against them. You gave them bad data, right? So you have to be honest. You have to be realistic. You're not pie in the sky. You're not undervaluing your what is real. What am I likely to make? And if you give your CPA, your tax strategist CPA, the best information you have, they will provide solid advice that will allow you to, again, save future taxes, save you a future fortune.
Yeah, and as far as real estate investing goes, right, also letting them know when you are planning to buy a property and how much that property is and all that, because they actually have a lot of things they could do with that information. So it's a relationship with your tax strategist. You need to let them know as things change, because maybe what your plan was in the beginning of the year changed in the middle half. So you want to keep constant communication with them.
Again, like here's another example, right? Let's say you were primarily an active investor. You're primarily doing active day-to-day stuff. And you've got a spouse who's getting into managing your rental properties. And suddenly, because they've spent a lot of time, you started to accumulate rental properties, now they qualify in the IRS's eyes as a real estate professional. That change from not having a real estate professional status to having one could shift your tax burden by hundreds of thousands of dollars, like an enormous amount just by gaining that tax status. And if you didn't tell your tax strategist that you were buying rental property, and you plan to buy more rental property and you plan to manage more rental property, they might not even thought about it, right? Because the tax code is huge and your day-to-day business, your usual tax returns don't have that. So they wouldn't advise you on this future benefit by gaining the status because you didn't tell them. Communication is key, both for tax prep and for tax strategy, but specifically for tax strategy, because they cannot give you good advice if you don't give them good information to work with.
And I guess as we wrap this up, we can talk about some of the main things that ideally, if you are a real estate investor, that one of your tax preparers and tax strategists know about some of these points. So one, Chris already mentioned, is the real estate professional status. They should be very experienced in how you could qualify for that, because they need to be advising you on how you could qualify for that if you can. Number two is what is accelerated depreciation or bonus depreciation for rental properties. Again, very important. It's one of the ways where we've been able to write off a good chunk of our income because of that. That's related to the real estate professional status. So make sure you talk to your tax strategist and prepare about that.
And I want to jump in here really quick about the specialization thing. We have had CPAs who did not understand how depreciation worked at all because they were not dealing with real estate at all prior in their firm. So we've had people who should have been taking depreciation, not even bonus depreciation, just straight line depreciation, and they had missed it for 3 years, even though they own rental properties. The weird thing here is the IRS assumes you took it, so you still have to recapture it later. It actually double hurt them because their CPA did not understand what this particular investor's strategies were.
So the third thing they need to know is the de minimis safe harbor. I'm not going to talk about what it is. You can Google it, but your tax strategist should know what that is. I'm going to write down here how it's spelled. Google it. Okay.
Yeah. And then the last thing, what are we on? 4? The last topic, the number 4 we should talk about is there are different types of real estate, right? There's short-term rental real estate. There's long-term rental real estate. There's active participation in syndications. There's passive participation in syndications. And the list goes on. There's a lot of different types of real estate. It would be absolutely beneficial if both your tax preparer and your tax strategist are familiar with the type of real estate that you do and the aggregation rules. When does it make sense to lump them together into one rental activity versus separate rental activities?
So that's jargon that your tax strategist and your tax preparer should know. If they I'm not sure what that is, you can still keep them for some other things, but you need to find a specialist for real estate for that specifically.
Yep, the specialist pay in spades.
All right, well, hopefully that was helpful, guys. I know right now is right about the time when we think about adding tax preparers and adding tax strategists to the mix because we're trying to figure out what we're going to do for this year's taxes, right? So definitely interview some tax strategists and tax preparers out there because you need to make sure that you are writing off as much as you can. Like Chris said, the goal is for your taxes to be accurate, right? Mm-hmm. You don't want to pay more, you don't want to pay less. Make it as accurate as you can be. Hopefully this wasn't too boring. We do have some other more exciting videos about how to work with your spouse and how to invest in real estate and all that cool stuff that's not super boring like taxes. Check out the playlists on our channel so you can watch more of those exciting videos. We also have a free Facebook group called Faster Financial Freedom where you can network with other people who are on the path to financial freedom and some who are there already. Alright guys, thank you so much for watching and we'll see you at the next video.